Editas Medicine. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So we go here to the Megatrends, and there is a theme called Genetic Engineering. You can see that there's an 112% here from the 52-week low, but we are minus 50-ish% away from the highs. And if we compare that with the Genomics ARC G ETF, you see that the Megatrend theme is massively outperforming. The key thing about this theme is that these companies are more pure plays, while in the ARC G ETF, it's a bit mixed. You have some pure plays and also some companies that are they're actually way broader. But anyway, here is Editas. Here, gene editing is the business, 39-ish% here from the 52-week low, but we have seen a pretty astonishing minus 62% pullback, which is, big. So this is definitively, a theme that is very interesting long-term. So what if we could repair broken genes? That is the question we ask ourselves at Editas Medicine. We are pioneering the possible. Our mission and commitment is to harness the power and potential of CRISPR gene editing to develop a robust pipeline of medicines for people living with serious diseases around the world. Yeah, so let's jump into the charts. The thing is that, this is one of those stocks that move in cycles. As you can see, it does move in these, sometimes smaller time cycles and sometimes more medium size. And, here is, a big, major time cycle. I did try to find some consistency in the cycles. The thing is that they have differed over time, but the key thing about a time cycle-ish security is that it's very clearly one you want to buy low and sell high, because as you can see here, these time cycles are pretty substantial to the upside and also to the downside. And so it's very important to manage your position when you have like a time cycle security, because if you look from here to this high, 248%, then you could be here with almost nothing due to these time cycles. The reason why this one popped up on my radar is because we are currently at a time cycle low. We did unfortunately slice here through this blue 100-week moving average. So it's now become a resistance, and you see that historically it's been a very important moving average. The thing is that the red 200-week moving average here is right below us, so we do have some support close by, and you could make a strong case that we are also at horizontal support. So the technical picture here is interesting longer term. Going here to the daily data points, then yeah, we don't have any moving average support. Well, you could maybe make the case that the 10-day moving average is some kind of support, but we don't have any long-term moving average support. We do have some horizontal support levels that could help us out. So technically speaking, we have seen a major pullback, but maybe there's some opportunities because of that. When we look here at the other indicators, accumulation distribution is not bullish. So we don't have people interpreting it yet as like a major buying opportunity. Looking here at RSI, the current level, it is at a low that has formed key lows in the past. The distance from the purple 20-week moving average, green 50-week, and also green 50-week moving average here is at a level that has been bought in the past. Back here, it was bought, and that formed this low. This low here was bought, same distance, from the green, and also to an extent the purple 20-week moving average. And here at the daily data points, accumulation distribution is not looking healthy. So sellers are definitively very much in control. The problem with that indicator is that if you are going to wait until you see like a major pickup, it could be that you already get a big move to the upside. Yeah, so sometimes you have to be a bit contrarian. But there are certainly times where accumulation starts before, the stock makes a big move, but it really differs. Yeah, okay. So here is the correlations between Editas and the S&P 500. 72%, rather, strong-ish, but not super strong. With the genomics ETF, it's only 83% positive. And then you have minus 38% here with the 10-year yield and minus 71% negative with the dollar index. Short term, we have a 58-ish% with the S&P 500, only 17% positive here actually with the genomics ETF. Minus 63% with the 10-year yield and 46% positive all of a sudden here with the dollar index. Okay. So here is the seasonality. If you look at the last 6 years, November, which is right around the corner, is the strongest month. So it closes higher 80% of the time with an average 17% gain. That is obviously a very, very bullish seasonality. December also decent, closes higher 60% of the time with an average 24% gain. A symbolic number, 24 for December. So yeah, November, December looking good. Looking here at the Analyst, well, we don't have any trend lines and helping us out here. If we look here at the Analyst price targets, you see that so the stock is at $37.82, and yeah, almost all the price targets for 2021 are above the current stock price, which is bullish. If we look here at the $41 price target from SVB Leerink, that implies an 8% upside. Looking at SACs, number 3 hold, F value, F growth, A momentum. So value and growth scores are not helping out here, but A momentum is good. But yeah, it's a bit mixed message when it comes to the fundamentals. No dividend, 2.6 billion in market cap. So to sum up, the theme is definitively very interesting long term. Technically, this is an interesting opportunity. The seasonality was very bullish. Fundamentals also has a bullish lean. So all in all, I think that there's more reasons here to be bullish than bearish.